Hello, everyone. In this session, we're going to look at one of the practice assessment from the AAT website, and that's for the Financial Act 2021 with the AQ22 syllabus. So you're looking at practice assessment 1 from the AAT website, and this is a little bit new. You can see here we have now different template. It's not like before Surplus Viewer. It's like quite straightforward, and you do the exam on the website. And on the right corner, we have an index. So you can look at the index, the questions, 10 questions you have to answer for this practice assessment 1. And of course, in the main exam, we'll have a 10 question as well. You can highlight. So you can look at the highlight, clear the highlight. And also you have a reference material that you can see from your right-hand window corner. So all of this thing will be available in the exam. So in the exam time, if you need to look at any rules or something, you can always look at from the reference material. So you have to be a little bit get used to if you are with the new syllabus and you're doing the exam first time with the AQ 2022, and the window is a little bit different than before. All right, let's have a look at some question and we'll see what type of question we have on the practice assessment 1. Question number 1 is asking task 1 for 10 marks. This task is about the principle and the rules underpinning the tax. This task contains part A to B. There are 5 principles which underpin taxation system. So we know that there's 5 principles that underpin the taxation system. And there's a 5 principle. They said state and define any 3 of the 5. Now the 5 principles we already know. The first one we have neutrality, NEUTRALITY. Neutrality is all about like to be fair or showing the equality to all different businesses. So be fair or treat equally between different form of businesses. This is the first one. The next one we have efficiency. Efficiency is all about to minimizing the cost for the business and for the government for administrating the tax. So minimizing the cost and admin tax. The next one we have the certainty and the simplicity. Certain and simplicity. Certainty and simplicity is all about make the tax rules very clear to everyone and make it easy to understand. So clear and easy to understand. Next one we have effectiveness and fairness. Effectiveness and fairness. Here we look at the taxation amount is a right at the right time. So we can say like taxation being the right amount at the right time. So right amount of tax in right time. For example, if there is inflation, if there is a recession, that time maybe government try to change the tax rate to give some favor to the people. So we have to know like this tax is appropriate in this time. And the last one, we have a flexibility. flexibility. On the flexibility, we look at the taxation system need to be like user friendly, and it has to be compatible with the technology. So it has to change with the changes of technology. It has to be changed with the changes of technology. So there's the 5 undermining principle for the taxation system. They're asking to explain 3, so you can take any 3 you like. But if you like to read in detail, you can always read that from the book. The next one we have here that says, you work in a small accounting practice and your manager has handed you the file of a client which has been with the practice for a number of years. You know that the client is resident and domiciled in the UK. Virtual, the client has always declared all UK income to HMRC. He has recently been receiving rental income from overseas property. The client has emailed you stating that as the property is not based on the UK, he thinks that he does not need to declare this income to HMRC. Now, this is just one situation. In any scenario, if the client does not agree with the accountant, if the client said, I don't want to show this income or that income to HMRC, the treatment will be same. All we have to do, we have to tell the client, you have to do it. If you don't do it, I cannot act as an accountant or as an agent for your company. And I have to tell the HMRC, like, from now, I'm not acting as an agent for your company. But be careful one thing, never ever give the reason to HMRC why you are resigning from that client. So the requirement here is explain to your client why the income from the overseas property need to be declared to HMRC and the practice action, if any, if the client refuses to make this declaration. So the first one, explain about the domicile. So you need to tell the client, as you are resident and domicile in UK, that means you have to declare all of your income in UK, in the UK and overseas. So it could be the UK income, it could be the overseas income. Both income we have to show to HMRC because I'm resident and also domicile in the UK. So if I have any income in the UK and if I have any income in overseas or worldwide, all the income we have to declare to HMRC if I'm resident and domicile, if I have both status. The next one is if the client refuses to do that, what you'll do. Very simple. So we have to stop acting as an agent for that client, number 1, and inform HMRC and let the client know in writing So you have to tell the client writing, like from this day, I'm not acting as an agent for you. And finally, remember, do not give any reason to HMRC. So when you resign or when you stop acting like agent, you should not give any reason to HMRC why you are not acting as agent anymore for that company. All right, so this is the first one. Let's move to the next one. The next one we have for the car benefit question. If you look, this question is said this task is about income from employment. Okay, this task content part A to C. So you have Dr. D and Ms. B had the use of the company car during 2021 and 22. Then all necessary information in respect of each car is detailed below. So we have a two car. So we have a car for Dr. D and Ms. B. Number of month. So for Dr. D is 12 month and Ms. B is 8 month. That means all benefit will be capped to 8 month. Remember that you have to calculate all the benefit for 8 month. Car registration date is also important because if the car registered April 2020, so we have a date there, we have to see 1% need to be increased or not. So car registration date, we have a 30 of March 2020, and here we have 14 April to 19. That means before April 20. So that means we have to add 1% here. With this car, obviously, like registration date is very important. Also need to look at, is this car satisfy the condition of RDE2 standards. So this one is satisfied with the diesel meter. Okay. The fuel detail, this is a petrol hybrid car. So hybrid car, petrol with electronic range 120 miles. Okay. And this is a diesel meter RD2 standard. So you don't have to add anything for the RD2. CO2 emission 40 gram and a 112. Okay. Cost price 24,032. We really don't need the cost price because you always take the list price. Remember that list price is more important. Cost price is not very important for us. Employee contribution to the cost of the car 6,500. Remember that even though the employee contribute 6,500, we can take a maximum 5,000. So maximum 5,000 we can deduct from the list price. Remember that. Then employee contribution to use of the car. So Dr. D, he don't contribute anything, but Ms. B, she contribute 120 per month. So this will be reduced from her benefit. So from the total benefit, we need to reduce 120 per month. So 120 times 8 months, she used the car. So we need to see how much it is, and it will be minus from the total benefit. Remember that this 6,500 will be minus from the list price of the car, but this 120 per month will be minus after the benefit calculation. Private fuel provided by the employer, no. So for the Ms. B is yes, you have to calculate the fuel benefit, that is 24,600 multiply with the benefit, car benefit percentage. An employee contribution to the private fuel, no one pay anything for the fuel, so I don't have to worry about that. Okay, so let's move on to our calculation. So the working, so we need to look at here for this question. We have to find how much is the car benefit we have here, scale charge, and we have taxable benefit of the car, taxable benefit of the fuel. So you have three things. So let's do some workings. So the first thing, if we look at the reference material quickly, we can see our car benefit percentage. So here we can see we have the CO2 emission 1 to 50 and the electronic mile range 70 to 121, 129. We have only 4 gram. So the benefit percentage is 4%. So this is satisfied with this one. This is 40 gram and 120 miles. So this comes, Dr. D comes under this condition. So he said for this one, we'll have 4% the car benefit. And for the next one, it is 120 grams. So we need to do some workings. And we have to add 1%. Obviously, if the car is registered before April 2020, so this is additional 1%. So this car is registered 19, so before April. So let's try to do the calculation for this one, Ms. P. So we have here 112. You have to minus the 55 because for the 55, we have 15% fixed. So 112 minus 55, that will give us 57. And you have to divide by 5 to find it out how much it is. 11.4, we can take 11 because we have to always round it down, 11. And for this 55, we have basic 15. So we take 15. So 11 plus 15, it is 26. And 1% for the 1% for the additional because of the registration before 6 April 2020. So plus 1. And that gives me 27%. So now we have the calculation. For the Dr. D, it is 4%. And for the Ms. B, it is 27%. So both of them, we have this calculation. So this is the first calculation we need to do. We have to find it out. How much is the percentage before we find it out how much is the benefit. So once we have the percentage, so our first step is done. On the next step, we're going to look at how to calculate the benefit. So once we have this, the percentage calculation, now we can calculate our taxable benefit. So if we try to now find it out how much is the taxable benefit for Dr. D and for Ms. B, first I need to look at the list price. That's the first thing we're going to look at. So look at the list price. And the list price for the Dr. D is 26,200. So 26,200. That's for Dr. D. And we have Miss B as well. And the list price for that is 36,100. And the first thing we need to do, we need to take out the capital contribution by the employee. So contribution for Dr. D, he made a payment of 6,500, but we cannot take 6,500. We can take maximum 5,000. So minus 5,000 from here. And this one, Ms. B don't have any capital contribution. And once we have that, we have to find it out how much is the percentage. So 26,200 minus 5,000. That gave us 21,200. We have to multiply with the percentage. For this one, we have 4%. And for this one, 36,100, we have 27%. So times 4%, and that gave us 848. And for the next one, 36,100 times 27%, and that gave us 9747. But we have to remember she used this car only for 8 months, so we have to find it out. Divide by 12 times by 8. So divide by 12 times by 8, and that will give you 6498. This is the taxable benefit. But also you have to remember she is also paying 120 per month against this benefit. So 120 per month for how many months? 8 months. So 120 times 8. So you have to minus 960 from the benefit. And that will give us 6498 minus 960. And that will give us 5538. So this is the taxable benefit. And the next one is the fuel benefit. Fuel benefit is very simple. We don't have any fuel benefit for the Dr. D because he don't take any benefit, only for the Miss B. So we have 24,600. This amount is fixed. Have to multiply the percentage, 27%. So 24,600 times by 27%. And that will give us 6642. And we have to make sure the month we consider 8 months, divide by 12 times by 8. So divide 12 times by 8, and that will give us 4428. And that's it. So we can just go there now, complete this one. So we can just go, we can say this is now, this new system is quite like moving fast on the computer. So you need to make sure like in the exam, you check first, is it happening there to inform the invigilator like this is happening during the exam time. So scale charge percentage, so we have 4% for the first one. Next one is 27%. Then the amount for the taxable benefit, 848. And for the Ms. B, 5538. 5538. And for the fuel benefit, 4428. All right. I think that's it for the first one. If we move to the next one we have here, it says below is a list of benefit that Z Limited provides to its employees. Okay, we need to find it out which benefit is taxable and how much it is. So let's look at the first one. It says enter the taxable benefit in kind for 21-22 for each benefit in the box provided. Enter your answer in whole pounds only. If your answer is 0, enter 0. Mrs. L moved into a house provided by Z Limited on 1st January 2018 when its market value was 295,000. The house cost Z Limited 210,000 in April 2010. Mrs. L pays Z Limited 500 per month toward the house use. Remember, if the house is purchased 6 years before the day house is given to the employee, we always have to use market value. And if the house is cost more than 75,000, then you have to use some additional rate for the luxury house. So we have annual value that is 7,200. So we said annual value 7,200. This one we know anyway from the question. Now we have to find it out. How much is the additional cost? Now we'll take the market value because house is given 2018, but the house was purchased on April. So 10 to 18, more than 6 years. So it's a 295. This is the market value of the house now. We have to minus 75,000. 75,000 is from the formula. More than 75 is called luxury house. So we have to find 2% on that. That's the official rate. So 295,000 minus 75,000 times by 2%. And that gives me 4,400. Now, the next thing we have to see, how much is this person is paying. So we can see this person is paying 500 per month. So contribution by employee. So 500 per month, 500 times 12. That gives 6,000. 6,000 will be deducted because she is paying 6,000. So 7,200 plus 4,400 minus 6,000, and that gives me 5,600. And that's my taxable benefit for the house. The next one, it says Mr. V moved 200 miles due to a promotional and received 9,500 to help with the removal expense. Remember that removal expense is free up to 8,000. If it is more than 8,000, you have to find the difference and it will be taxable. So from 9,500, if you minus the 8,000, 1,500 will be taxable benefit. The next one we have, Miss Q received an interest-free loan 15,000 on 1st November. 1st November. This is the only loan she received. Remember that if the loan is more than 10,000, the whole amount will be taxable. More than 10,000, full amount is taxable. So it's a 15,000 times 2% is the official rate. So 15,000 times 2%, that's 300. But she received the loan in November. So November to March. So November, December, January, February, March, 5 months. So I have to divide by 12 times by 5. So 300 divided by 12 times by 5. And that gives us 125. So this is my taxable benefit for that. The next one we have here, Mr. Yu received a watch for his 30 years long service award. This was Mr. Yu's only long service award, and the watch cost 1,800. Remember that long service award is allowable £50 per year. Anything excess of that, it will be taxable benefit. So £50 per year is allowable. So for the 30 years, if it is £50 per year, so it should be maximum 1,500 is allowable, but the watch cost is 1,800. So 1,800, so the difference is 300, and 300 will be taxable. That's it. Let's move to the next one. The next one we have here, the true and false question. It says, the first one, it says, Mrs. F is the director of F Limited. She received a bonus of 2,500 on 30th of April 2021. The bonus was for the accounting year 31st of March 21. Mrs. F will be taxed on the bonus during 21-22. This is not true, it's false, because if the bonus is already accounted in 31st of March 21, so you don't have to be again pay tax on 21-22. So there is two things. One is the bonus is entitled, and one is actually the bonus is received. So here, even though the bonus is received on April 21, that is 21 and 22 next year, 21 and 2, but actually the bonus was entitled last year, 2021. So if the person is entitled for the bonus, even the bonus he received next year, but still he have to account for the bonus this year. So if the question tell you like the person is entitled for the bonus, that means you have to account for this year, even the actual bonus is not received until the next year. So even though he received on April, but doesn't matter, he don't have to pay again. HPLC pay all of its employee £5 per week working from home. As the employee now work from home part of the week, the employee will not be taxed on the allowance. That's true. So £5 per week is allowable expense. You can always look at the reference material if you like to see it. This sort of information will be there, so you can always double check. Mr. Y uses his own car for the business purpose. His employer pay 40 pence per mile. During 21-22, Mr. Y claimed 15,000 business mile. Okay, 15,000 business mile he already claimed. And what else? It says Mr. Y has an allowable expense 250. Is it true or false? Let's have a look. Because we know first 10,000 is allowable is 45 pence. And after that, next 5,000 is 25 pence. So how much it is? So 10,000 times 0.45, that gives me 4,500. And 5,000 times 0.25 pence gives me 1250. So the maximum allowance is basically 5750. That's the maximum allowance. Now how much are you getting from the employer? 15,040 pence. So 15,000 times 40 pence. So 15,000 times 0.40, he's getting already 6,000. So he's getting more than the allowance. So 250 here, it is taxable, not allowable expense. The question said is allowable expense. No, because he's getting more than the allowance. He's supposed to get maximum 5750, but he's getting 6,000. So 250 is taxable. It's not allowable. So it is false. So this is our question number 2. So that's how we have to carry on this question. We'll continue maybe on the next session. I'll do from question number 3. So that's how we'll try to complete the whole assessment. Thank you everyone for watching. Hopefully on the next session, I'll try to show you some more questions.